7:37, 14 degrees. Turning to business news now. Our business editor, Mike Eppel, joining us this morning. Mike, we are 7 minutes into the trading day, and one of our producers handing me some numbers. The TSX down 750 points, the Dow 980 points off, and we're 7 minutes in.
Yeah, it was down 1,000 points on the Dow earlier in the first 2 minutes of trade, Ted. It is a rare day indeed that you see a market move of this magnitude, but that was the stage overseas that was set by China, where the Shanghai Composite plunged 8.5% overnight. It was down 12% last week, down over 30% from the record that was seen earlier this year. What's happened here, I think, Ted, is the fact that these markets, when you take the roller coaster analogy, they are slow and steady to the peak, and then when they do drop off, that first drop, it is always the scariest, and that's pretty much the scenario that we're looking at this morning. And then we'll see some volatility as the market players will try to sort out exactly where the bottom is, are there buying opportunities, that sort of thing. But you have to question the fact that, okay, is China slowing down? Sure, that is a key focal point. The price for oil has certainly reflected all of that. It's below $39 a barrel this morning, but last time we had any type of market activity of this nature, we were back in 2008-09 with the collapse of Lehman Brothers and the subprime mortgage crisis, and a financial scenario where, let's face it, everything was frozen up, and it took months for that to be sorted out. At this point, aside from oil, does it really feel like we're in that type of a scenario in any stretch of the imagination? A lot of players are just saying, look, the market has had 4 years now where we have not seen any type of even a 10% market pullback. That is abnormal. You typically see these things happen every 18 to 24 months just to blow off some steam, and that looks to be what is happening in a big way so far this morning. So it is something to watch. Some people will panic, and that is where the long-term players will probably step back in to stabilize things going forward. Not so much so yet this morning. I mentioned oil below $39 a barrel. It is still on the slippery slope. Some talk that Iran, look, the market's already oversupplied, and Iran's talking about coming in for OPEC, so that'll just add to that problem. The Canadian dollar is starting the day at 75.5 cents. That puts the exchange rate at $1.32.5. That's very expensive. And big bank earnings this week, Ted, maybe that'll be a catalyst for some buying, or not. Canadian banks reporting their results, and they'll show exactly what the damage has been done to their energy component investments. All those bank stocks are down this year, and typically we don't see that either, but that is the case that we are dealing with so far for 2015. Back to you. All
right, good stuff. Thank you, Mike. That's our business editor, Mike Eppel, reporting this morning. You can hear Mike on 660 News at 26 and 56 after the hour.
BT's Market Report is brought to you by 660 News.